Hey everyone, welcome back to Corporate Decoder, the place where we take those boring corporate filings and turn them into something you might actually want to watch. Today we are diving into a GameStop filing that involves, wait for it, zero interest notes. Free money, almost. GameStop just wrapped up a big deal where they sold a bunch of notes, basically IOUs, to investors. We are talking billions of dollars. These notes don't pay regular interest but can be converted into GameStop stock later on and are subject to specific terms. Sounds complex. We'll break it down. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below so you can discuss GameStop with other investors. So the main event is that GameStop issued these convertible notes. Think of them like a special type of loan that can turn into company stock under certain conditions. GameStop sold $225 billion more, up to $450 million extra, if the initial purchaser wants them down the line. Now, these aren't your typical interest-bearing bonds. These notes are called 0.000% convertible senior notes. That means, shockingly, they don't pay any regular interest and the amount you owe doesn't increase over time. So how do investors make money? The key is convertible. The people who own these notes can turn them into shares of GameStop stock, but only under certain situations before March of 2032. First, if GameStop stock price is doing really well. Second, if the notes are trading poorly. Third, if GameStop decides to buy back the notes. And fourth, specific things happen to the company. After March 15, 2032, it's a free-for-all, and whatever the stock price is, these can be converted. When these notes become stock, how many shares do note holders get? The initial conversion rate is about 34.5 shares of GameStop stock for every $1,000 worth of notes. That works out to a price of about 28.91 cents per share. That's about 32.5% higher than the average GameStop stock price on June 12, 2025. GameStop can't just buy back these notes whenever they want. They have to wait until June 2029 to buy them back. Even then, there's a catch. The stock price has to be way up there, at least 30% above the conversion price for a good chunk of time. On the flip side, the note holders have a say too. On December 15, 2028, they can force GameStop to buy back their notes at the original price. Plus, if there's a big change in GameStop, like if they get bought out, note holders can also force GameStop to buy back the notes. There are things called events of default that would trigger the notes to become due immediately. That would be bad. A couple notable ones: failing to pay when they're supposed to, not following the rules in the agreement, or going bankrupt. There's a bit of leeway on some, with a 30-60 day grace period on some of the defaults, and a 365-day remedy period for GameStop should they botch something simple. There are also some limitations on if GameStop wants to merge with someone else. It can't do so unless the new company agrees to take over GameStop's responsibilities for the notes and doesn't break any of the rules. After all fees, GameStop ended up with over $2.2 billion from selling these notes. They plan to use the money for general business purposes, including making investments. These notes were sold without being registered with the SEC, thanks to some legal loopholes. People who eventually convert their notes to shares will also be benefiting from another legal loophole. Originally, these notes could be converted to a little more than 100 million shares of GameStop, but the company could increase that to almost 22 million shares if those extra notes are sold. As always, there's a section where GameStop says that everything they're saying is just their best guess based on what they know now. Things could change, and they don't promise to update anything. Now, looking at these moves more broadly, GameStop seems to be trying to be financially flexible with these zero-interest notes. They're betting that they can turn things around, boost the share price, and then these notes will be a win-win. But if things don't go as planned, they could be in a tough spot when they have to buy back the notes in a few years. Alright, that's our breakdown of GameStop's latest convertible note offering. What's your take on these notes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.